If you want to trade like institutional players and understand the strongest market levels, this video for you. Today I will cover everything you need to know about order blocks. Which order block are the strongest, how does it form, how to enter into the market using order block, and most importantly I will share a few secrets that no one talks about it. So make sure to watch this video to the end and let's figure out. Before we dive into the video, let me tell you about the free trading course I offer on my Telegram channel. I've put together a free course where I share the topics that gave me a deep understanding of trading. These are the insights that helped me level up, and now I want to share them with you. Go to my Telegram, check the pinned post and grab your free course along with a few more indicators to help you analyze the market. Don't miss this opportunity, it is all in your hands. And now let's talk about order block. What is an order block? Order blocks are key zones where large institutional players such as a bank and hedge funds have placed their orders. These blocks indicate important price levels where major buying or selling activity has occurred. Why is this important? If you understand where smart money accumulates positions, you can use these zones to find high probability trade entries. And how is an order block formed? And the first stage is manipulation and liquidity sweep. For the price to move, volume is required. Where does this volume come from? Big players create manipulation and liquidity sweep. This happens when the price sweep of swing high or low, and this formation triggering stop losses of retail traders. And at this moment, institutional traders gain liquidity, which they need to drive the price. And after this, an impulse move often forms. This is a first sign of an order block. And the second stage is volume confirmation. After the liquidity sweep, it is important to confirm that smart money has actually entered the market. And how we can identify this? First of all, we can notice imbalance on the market. We can see market structure shift plus fell volume gap or inverted fell volume gap. Market structure shift when the market structure changed by breaking the previous high or low. And fell volume gap confirms the strength of the level. And then understand order block strong or not, we should look at the volume indicator. And when order block form, we should to look increase volume. And if the price retests the order block with a low volume, it confirms that the zone is significant. And how correctly mark an order block? First of all, you need to identify the candle that swept liquidity. The entire range of the candle from high to low is considered the order block. And finally, let's talk about key aspects to pay attention to. First of all, you need to pay attention to manipulation, liquidity sweep. Without this, the order block will not be strong. And second, volume confirmation, market structure shift plus fell volume gap. This signals that smart money has entered. Impulse move after order block, a sign of strength. And there is another type. Continuation order block. You don't always need to look for reversal order blocks. There is another powerful tool, continuation order block. This type, unlike a standard order block, a continuation order block continues the trend instead of reversing it. And when a continuation order block forms a breakout structure, it confirms that the trend remains strong. A continuation order block becomes a key liquidity zone, where the price may return before continuing its movement. And now let's talk about types how to enter the market using order blocks. There is several ways to enter the market after an order block forms. I will share with you 4 types using OTE zone, which is entry at the optimal retracement level, from fell volume gap, entry if an imbalance forms after the order block, from the highest zone in FRVP, entry from the area with the highest volume, and directly from the order block, if the price tests the order block with a low volume. And first approach to enter in the market after order block formation is OTE zone. This approach is more suitable for beginners. We use the OTE concept to find the best enter point. We work with Fibonacci levels 0.62 to 0.79 to identify the optimal enter zone. And you need to set up Fibonacci levels. Here are my settings. You need to identify a strong impulse move after forming the order block candle and stretch the Fibonacci levels in the direction of the impulse. And then identify key levels from 0.62 to 0.79 and wait for a test of the OTE zone and observe price action. And when price enter in the zone, we need to identify signs of reversal and enter into market. The second approach, open position from fell volume gap. When the order block is formed, fell volume gap almost always appears. This is due to the fact that a sharp price movement leaves an imbalance between supply and demand after sweep of liquidity. In this scenario, we can see how price, type of liquidity, and create imbalance. And if we look below, we can see how volume is growing. And our task is to wait when price to make a pullback. Price filled the volume gap, and my task is open an order. The third approach is to use FRP to open position. As you can see, was formed order block, and at the bottom you can see increasing volume, which confirms the order block is strong. And there is one question: where to open an order? In this scenario, we will use FRP. Fixed range volume profile is a tool for analyzing volume within a specific price range. It helps identify key levels where significant trading activity occurred. How to use it? We need to stretch this tool like a Fibonacci level, and our task is identify highest histogram zone, because in this area was a lot of trading activity and it can be a magnet for the price. And our task is to wait when price to make a pullback in this zone. And when price inside this zone, our task is identify signs of reversal. And when you see when price to start reverse, your task is open an order. The fourth approach is open position from order block border. Our task is to wait when price create order block and open limit order from area of order block. The price make a pullback, and when price enter in the zone, you need to identify on lower time frame market structure shift. And when you identify signs of reversal, you need to open an order. Before I will show you some examples, I want to explain you some structure order blocks. There is two types: swing order block and internal order block. And now let's talk about swing order block. A swing order block is a major order block located at significant market extremes, local highs or lows. It forms at points where the market reverses or makes a strong impulse move. How to identify a swing order block? Usually it forms near key swing highs or swing lows, significant peaks or troughs, appears after liquidity manipulation and a strong price movement, often serves as a pullback zone for a test before continuing the trend. How you can use it? Enter on a retest of the block after liquidity grab. The higher time frame, the strongest the level. And another type, internal order block. An internal order block is an order block located within the current market structure, but not at extremes. It forms within the overall trend movement and indicate intermediate liquidity zones. How to identify this order block? First of all, you need to notice type of liquidity and a strong movement that create imbalance on the market. And in conclusion, swing order block are major zones for reversal or trend continuation, and internal order block, which is an intermediate zones within the structure for confirmation. Now let me show you some examples. This is Lux Algo Smart Money Concept Indicator. And if you open settings, you can notice two types of order block: swing order block and internal order block. And now let's look how looks like internal order block. As you can see, this order block creates inside the market structure after sip of liquidity. And after sip of liquidity, you can see how price create impulse move. And let's look how looks like swing order block. As you can see, these order blocks are located at significant market extremes, highs or lows. You can notice how price on high time frame sip of liquidity. And if you switch on low time frame, you can see how order block created more detail. So I want to show you one example with order block. We have swing high and swing low. And as you can notice, price manipulates swing low, create sip of liquidity and impulse move that create an efficiency. And after a while, price create market structure shift. And finally, let me show you some examples with these order blocks. If it's hard for you to identify order blocks, you can use indicator Smart Money Concept by Lux Algo. And let's pay attention to this example. Was formed order block that swap liquidity and create market structure shift plus imbalance. And if we look below, you can see how volume increase. That confirms that our order block is strong. And if you look at bearish volume, you can see how it is false. It means that seller's trade is weakening, and I need only open an order, and I will use a simple approach, open position from OTE zone. I need only wait when price to make a pullback to this zone and identify signs of reversal. So price inside this area, and I need to switch on lower time frame that identify market structure shift. The price formed an impulse move that broke market structure shift and create imbalance on the market, and now I can open an order. This example with swing order block. We have swing high and swing low, and our task is to wait when price sweep of swing high or swing low. As you can see, price swept swing high and create impulse moves that break our structure, and it tells us that was formed order block. And if we look below, we can see how volume increase. It is confirms that our order block is strong. And I need only identify point where to open an order. As you can see, it was formed by volume gap. Let's wait on price to make a pullback into this zone. As you can see, the price fulfill this imbalance, and I need identify signs of reversal from order block. So was formed market structure shift, and I need open an order. My stop loss will be above order block border and take profit below sell side liquidity. Order blocks are powerful tool, but true mastery comes with practice and experience. Keep learning, stay patient, and refine your strategy step by step. Success in trading isn't about luck, it's all about consistency and smart decisions. Keep pushing forward, and great results will follow you. See you in the next video.